A new era of crypto in Dubai. From flight tickets to property, the game of digital money. Imagine an Indian family planning a trip to Dubai. First, the flight ticket is booked, then a hotel is searched, and then someone thinks that if they find a property in Dubai, it could also be an investment. Until now, all this work was done through bank transfers, credit cards, cash, or traditional payments. But now, Dubai is conducting an experiment where cryptocurrency kept in a digital wallet will not just remain a shimmering number on a trading screen. Instead, it can become a medium for buying flight tickets, participating in property, and opening paths for global investment. Fear starts here, because in the world of crypto there is also the risk of volatility, hacking, regulation, and fraud. But curiosity is born here. How is that same crypto, which is still looked upon with suspicion in many countries, gaining entry in Dubai from the airport to real estate? Is the UAE truly becoming a laboratory for future money? Dubai has always been a place that doesn't just look at the future, it sells it. Sometimes it shocked the world by standing up skyscrapers in the middle of the desert, sometimes it turned tourism into a luxury experience, and sometimes it attracted global investors through free zones and business-friendly policies. Now that same Dubai wants to move ahead in the race for digital finance. Cryptocurrency and blockchain are not just tech trends for it, but part of a strategic plan. The UAE wants global crypto exchanges, blockchain companies, digital asset investors, and fintech startups to make Dubai their base. Today, the world of crypto is not limited to just buying Bitcoin and waiting for the price to rise. Digital assets like Bitcoin, Ethereum, USDT, and USDC are now being discussed in use cases like payments, settlements, investment, and tokenization. In Dubai too, these currencies are discussed the most, because Bitcoin is seen as digital gold, Ethereum is considered the backbone of smart contracts, and stablecoins like USDT, USDC are used for dollar-linked value transfers. But Dubai's plan is not just about buying coins, it is about creating a regulated ecosystem. There is no personal income tax on individuals in the UAE, and for this reason, many individual investors do not face the pressure of capital gains tax. Official taxation information from the UAE government also states that there is no income tax on individuals there. Although VAT and business-related tax rules may differ, it is this tax-friendly environment that attracts global investors. But this does not mean that crypto signifies complete freedom and no oversight. Dubai has chosen the path of regulation along with innovation. The biggest signal of Dubai's seriousness in the crypto world is VARA. VARA, or the Virtual Assets Regulatory Authority, was created to regulate and oversee virtual assets and virtual asset service providers in Dubai. VARA's job is to ensure that crypto exchanges, custody, payments, and related services operate within the law and compliance. In other words, Dubai's message is clear: innovation is welcome, but unchecked chaos is not. Now let's talk about the news that caught the common person's attention. On July 9, 2025, Emirates signed a Memorandum of Understanding with Link2Crypto.com, so that Link2Crypto.com Pay can be integrated into Emirates payment systems in the future. Emirates stated that the integration is expected to take effect next year, in 2026, and will be implemented with security and compliance standards. This is no small matter, because Emirates is not just an airline, it is part of Dubai's global identity. Imagine if a passenger could pay for a flight ticket with crypto in the future, how much the travel payment experience could change. An international traveler who has a crypto wallet would want to avoid currency conversion, card fees, or cross-border payment delays. This facility could be particularly attractive for young, tech-savvy, and digital asset users. Emirates Deputy President and Chief Commercial Officer Adnan Kazim also linked this step to customer convenience and evolving payment preferences. This means the airline understands that the coming generation will not be limited to just cards and cash. But a caution is necessary here. Emirates has not made crypto payments live yet. Rather, it has signed an MOU to explore Link2Crypto.com Pay integration. Integration is expected, but its practical rollout will depend on regulatory compliance and technical readiness. Therefore, it would be correct to say that Emirates is moving toward crypto payments, not that every ticket is being booked with crypto today. This distinction draws the line between truth and hype in the script. The second big story of crypto in Dubai is related to real estate. Real estate is a major engine of Dubai's economy. Investors from all over the world put money into the Dubai property market because the infrastructure, lifestyle, tax environment, and global connectivity are strong here. Now, the Dubai Land Department, or DLD, is trying to link real estate with blockchain and tokenization. DLD has pushed the real estate tokenization project forward under the 𝐟𝐸𝐸 initiative, and it has been described as a pioneering step in adopting blockchain-based tokenization by a real estate registration entity in the Middle East. Understand tokenization in simple words. Suppose the price of a property in Dubai is very high. Every investor cannot buy the entire property. But if the ownership of that same property is divided into digital tokens, then different investors can buy small portions of it. It's like dividing a property into small digital pieces. Each token can represent a share of ownership. This can make real estate investment more accessible. A person who previously had to buy property worth crores can now take a share even with a small amount, provided the platform is regulated and within a legal framework. DLD launched the pilot phase of the real estate tokenization project in March 2025. The aim of this project is to attract global technology firms, open new opportunities for the investor market, and provide multiple investors the chance to co-own a single property through tokenized real estate assets. In May 2025, DLD also announced the launch of the region's first tokenized real estate investment project through the Crypto Mint platform. The story becomes even more interesting here, because property tokenization is not just a payment facility, it is an attempt to change the mindset regarding ownership. In the old days, buying property meant papers for land or a flat, registry, a broker, a bank loan, and large capital. Tokenization says that ownership can be represented digitally, records can be kept on a blockchain, and fractional investment can be made possible. This can increase liquidity, allow small investors to enter, and enable global investors to connect with Dubai's property market. The Dubai Real Estate Sector Strategy 2033 is also part of this grand vision. According to the DLD, the goal of this strategy is to take the real estate sector's GDP contribution to approximately 73 billion United Arab Emirates dirhams, increase homeownership rates, increase real estate transactions by 70%, and reach a market value of 1 trillion United Arab Emirates dirhams. In other words, Dubai wants to make real estate not just a local market, but a global investment product. The connection between crypto and real estate is very strategic here. Many investors around the world hold digital assets, but it is not easy to deploy them in the traditional economy. Dubai is saying that if there is digital wealth, it can be linked to a regulated real estate ecosystem. This gives crypto investors real-world asset exposure and brings global capital to Dubai. But this path is not without risk. Property prices can fluctuate, token liquidity can be limited, there can be platform risk, and regulations can change. Many private developers in Dubai are also experimenting with crypto and blockchain. Reuters reported in January 2025 that Dubai developer DAMAC made a $1 billion deal with the blockchain platform Mantra, the aim of which was to tokenize real-world assets in the Middle East. Asset tokenization means converting ownership rights into digital tokens on a blockchain. This shows that real estate tokenization is becoming not just a government pilot, but also a matter of private sector interest. But behind the shimmer of crypto adoption lies a bitter truth. Crypto assets are very volatile. Bitcoin is up today, it could be down tomorrow. The price of Ethereum can be influenced by market sentiment, regulation, and technology upgrades. Stablecoins are also not entirely risk-free, because one has to trust their reserves, the issuer, and the regulation. Therefore, buying a ticket or investing in property with crypto sounds modern, but the investor must understand that the risk of a digital asset is not like a traditional bank balance. The UAE understands this risk, which is why it is moving forward with regulation. The Central Bank of the UAE has also issued the Payment Token Services Regulation, which provides for licensing and rules for payment token services. Its purpose is to bring payment tokens and stablecoin-related services into a legal framework. This means the UAE is not just saying let crypto come, it is also deciding who can provide the service, how they can provide it, and how consumer protection will be maintained. Dubai's crypto plan is different, because it is not just selling speculation. It is saying that blockchain can be linked to government records, real estate registries, payment systems, and the digital economy. This is smart city thinking. If property records on a blockchain are more transparent, payment settlement is faster, ownership is fractional, and global investor entry is easier, then new channels can open in the economy. But this will only be successful if compliance is strong, fraud is controlled, and investor education is clear. From an Indian perspective, this story becomes even more interesting. Cryptocurrency is not considered legal tender in India. There are tax rules on crypto trading, TDS rules, and regulatory caution. Indian investors are interested in crypto, but its use in everyday payments is not common. On the other hand, Dubai is trying to provide a regulated environment for crypto companies and investors. This contrast creates curiosity for the Indian audience. On one side, India is moving with caution, and on the other side, Dubai is making it a part of the future economy. But this does not mean that buying everything with crypto in Dubai is easy and guaranteed. Many transactions still go through traditional banking, AML checks, KYC, source of funds verification, and regulatory approval. In buying real estate, identity, compliance, and ownership rules still apply. Crypto payment does not mean that someone can buy unlimited property from an anonymous wallet. Dubai's strategy carries both innovation and compliance together. A major reason for crypto's popularity is its speed and borderless nature. If an investor from Europe, Asia, or the Middle East wants to enter the Dubai market, digital assets can reduce friction. In traditional banking, there can be problems with currency conversion, settlement delays, and fees. Crypto rails can be faster, but with speed comes responsibility. If money goes to the wrong wallet address, a fraudulent platform, or a hacked account, recovery can be difficult. That is why Dubai's focus is on licensed platforms. VARA maintains a public register where information about virtual asset service providers with full licenses or in-principle approval is available. This transparency is important for investor protection. No investor should use a platform just by looking at an advertisement. It is necessary to understand the license, regulator, custody system, fees, risk disclosure, and complaint mechanism. Now the question is, why exactly is Dubai doing all this? The answer is competition. The world's major financial centers, Singapore, Hong Kong, London, Switzerland, New York, and Abu Dhabi, all want to establish their place in digital assets. Dubai knows that if it attracts crypto and blockchain companies early, jobs will come, capital will come, technology will come, and its global position in financial services will strengthen. Becoming a crypto hub is not just a game of coins, it is a game of talent, regulation, and capital. In Dubai's strategy, tourism, aviation, real estate, and fintech appear to be interconnected. When Emirates explores crypto payments, it links tourism and travel to digital finance. When DLD performs tokenization, real estate and blockchain connect. When VARA grants licensing, the crypto industry gets a legal identity. When the central bank brings payment token rules, the payment system gains stability. These are not separate pieces of news, they are a broader economic direction. But the audience should understand one thing clearly. Crypto may be part of the future, but not every crypto investment is the future. Dubai is accepting crypto, but that doesn't mean every coin is safe. Even established assets like Bitcoin and Ethereum are volatile. It is necessary to be careful of meme coins, fake tokens, unlicensed exchanges, and guaranteed return schemes. Putting money in without research just by looking at Dubai's shimmer is like giving an advance to any builder just by looking at a skyscraper. This story is significant because the world's money system is gradually changing. First there was cash, then came bank transfers, then credit cards, then UPI and digital wallets, and now blockchain-based assets are being discussed. Every new system does not immediately eliminate the old system, rather it gradually makes a place alongside it. Dubai wants to capture this transition. It is saying that in the coming times, money may be seen not just in a pocket or a bank account, but also in a wallet address and a blockchain record. In the coming years, if brands like Emirates make crypto payments practical and government bodies like DLD expand tokenization securely, Dubai could become a major example of global crypto adoption. But if volatility, fraud, or regulatory confusion increases, adoption could also slow down. Therefore, this journey is exciting but demands...
This video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.